Hey everybody, I'm Matt Belinsky, and I'll be here moderating this panel on empowering entrepreneurship with the crew from BAM Ventures. We have Brian, Rich, and Shameen, and it's a pleasure. And I'm sure it's going to be an incredible panel here today. So just to set the stage here, Brian is one of the most seasoned and successful, participants in the LA startup ecosystem and has been for a couple decades now. Brian, would just love to hear a little bit more about your entrepreneurial journey and how that led you to start BAM, and I believe it was 2014.
Awesome. Thank you so much, Matt, for having us, and thank you to everyone at eCom Week. Super excited to be here and share the journey that led us to BAM Ventures. But my background is pretty straightforward. I'm an entrepreneur. Started life as a lawyer. Worked at Skadden Arps, and then started LegalZoom.com out of my condo about 23 years ago now. It's an overnight success that took 23 years. But so I built that with some friends, kind of ran that with the team for about 10 years or so, and then started my second company called ShoeDazzle.com with Kim Kardashian. We sold that to Textile down in El Segundo, and then and that's where Rich John joined me actually to help build ShoeDazzle. And then I started my third company called The Honest Company with Jessica Alba a few years back, and was the CEO there for the first five years or so. And then all throughout my journey as an entrepreneur, I had the great fortune of meeting other entrepreneurs, and some of them were just fantastic with great ideas. And so I started investing small angel checks into some of these startups and did pretty well with them, but realized I had dozens and dozens of angel investments that I wasn't managing to the best of my ability. And that's when I kind of partnered up with Rich John. We put a little bit more structure around our investing and basically started BAM Ventures in 2014, and it was off to the races since. So Rich and Shameen, if you'd like to introduce yourselves too, that'd be great.
Hi everyone, thanks again, Matt, for having us. I joined Brian in early days of ShoeDazzle, and it's been such a joy to work with him. We've had a lot of success building companies, but I've personally been more excited about investing in our friends in Los Angeles and elsewhere and helping them build their companies. I think in 2014, when we started BAM One, it was a pretty easy thesis. I mean, we knew we had a certain skill set building and scaling consumer product companies. And then we also knew that LA was poised to really have a moment where people wanted to start their own companies. They would come to us for advice. And a lot of times they were so impressive. These are all friends of ours that we had worked with or had known for a while, that we started investing micro checks into what they were doing. Those investments ended up doing really well. And as Brian had mentioned, we felt that this wasn't just a one-time moment where entrepreneurs were going to launch companies. We knew it was going to be sustainable. We knew we were boots on the ground very early, and we wanted to build a structure in supporting entrepreneurs. And I think we've created that. We just closed on our third fund, and I'll pass it over to Shameen, who we brought in as a full partner in fund two.
Hey everyone, I'm Shameen. As Brian mentioned, I'm the third partner at BAM Ventures. I have been a long-time consumer angel investor, and prior to BAM, I've been working at other venture capital funds, doing consumer sourcing and also running the day-to-day operations at funds. We all had our own track records and had overlapped a lot on boards and worked together. And Brian and Rich are really unparalleled in seeing, the magic in founders really early. And consumer investing is really an art and not a science, and particularly more so at the pre-seed when we invest. And so I love working with the guys. As Rich mentioned, we closed our third fund, so we're off to the races and going to keep at it.
Fantastic, and very exciting on closing the recent third fund. And to dig deeper into the real nuts and bolts of your investment approach and how you empower entrepreneurs, you guys BAM makes no bones about it right there in your mission statement that you guys invest in people and that you highly value resilience in founders. So how do you identify resilience in a founder, and how do you nurture that quality as throughout the experience?
Yeah, I think resilience demonstrates itself not only in that particular business, but when we talk to founders, you'll have to sit in on a meeting with us one day, but Brian goes back to the founders' best friends, how they were raised, what their upbringing was like, what activities they did. I think resilience demonstrates itself throughout life. And it kind of helps form who you are. So it's not only how dedicated are you to this particular company, but how have you navigated through life? What hardships have you experienced? How have you dealt with failure? How have you overcome it? And I think all of that deep dive really helps us identify what personality type we think is tackling this particular business and whether they're the right fit. People talk a lot about founder market fit these days, and I really believe in that.
Yeah, we completely believe in everything Shameen just said, and it really is about the founder. We tend to back founders that they have to make something work, almost like they have no choice but to make it work, and they're going to do everything they can within their own power to make sure that happens. And so really it's like we tend to say that we have to, at Bam Ventures, we have to love the founder and not hate the idea. And because we invest so early, it really is about, can this founding team get this done? And are they going to keep going no matter, because it's a journey. It's always hard. And every entrepreneur will tell you it's hard. Even our logo, and not to promote BAM, but here's our logo. You'll see that it's a journey where it's not everything is up and to the right. It's up and down, it's sideways, it's all around. But at the end of the day, resilient founders find a way to get to the finish line.
Yeah. Oh, sorry, Rich, go ahead.
Just to add to that, it's cliche these days to say, we're founders investing in founders, right? Like everyone claims that, and I think we lose track of why it's important, right? Like, so we've certainly built companies. We understand how difficult that journey is. So it's really easy for us to test for those characteristics because that journey is a very long and arduous one. Brian mentioned LegalZoom, right? And it went public this year, but literally is a 23-year company in the making. And you get gut punched, with your successes also comes moments of failure and self-doubt. So we really do know how to measure up someone and see where they will, how they will respond in certain moments of crises, right? Like that's kind of what we test for. We also test for blind spots, right? Like how do we support this entrepreneur? Are they strong on marketing? Do they need ops help? Are they great in supply chain product, but they need marketing help, right? So these are all the ways that we kind of vet opportunities and founders. And the other, we've had the benefit of working with world-class management teams, LegalZoom, Honest Company, Shoedazzle, as well as now over probably 100 portfolio companies, many of which have gone on to being extremely successful and having founders that we would back again in a heartbeat, right? So we think we now have the muscle memory and the experience to really vet for those entrepreneurs that we think will optimize for a huge outcome for them, for the company, and for us. But we also understand that not every entrepreneur, you're not going to find a perfectly built entrepreneur from day one, right? Like we need to understand the core of what they have and then to be able to backstop their weaknesses. So that's kind of our mission at BAM.
And speaking to how you guys have been able to sharpen your radar for identifying the proper qualities and then also risk factors with founders. If resilience is kind of a more kind of just a blatant priority and vital quality for you guys, what would be a more underrated quality that you look for in founders that might not be so readily apparent?
For me, it's humility. And I think it's important in two ways. We live in this world now where everyone is a unicorn and people are aspiring to be on the cover of TechCrunch. And so there's a pressure to, boast and peacock. And for me, when I find founders who have conviction in what they're doing, but also have the curiosity to ask questions and have the humility to know their strengths and weaknesses, it's a really powerful trait, both in attracting talent and empowering their employees, because nobody wants to work for Mr. Know-it-all. And as well as an investor, it helps, forge a true dynamic where you're actually problem solving and creating a dynamic where the sum is greater than the individual parts. So I don't find founders who come to us and say, hey, I'm working on XYZ, but this isn't my core strength. I want some help there. Who are these resources? I don't find that as a weakness. I find that as a strength.
Absolutely. And, so innovation and management are different qualities and require different skill sets. And not every founder necessarily is fit or is optimized to scale a company. What's BAM's approach towards assisting very innovative but perhaps a little wet behind the ears founders in the scaling process? And a related question: do situations ever come up? I'm sure they do, where you need to help a founder accept their limits and maybe accept some help and a co-founder who might have that supplemental skill set.
Yeah. Go ahead, Rich.
So, I'll speak to the co-founder issue first, right? And my partners could disagree. I always like co-founding teams, right? I always feel that a single founder is somewhat limited, right? Like there's a lot of advantages to having a singular voice and a singular direction for the company, and that person being either the brand of their company or at least the apostle as to why that company should exist. However, it's sometimes you're just so committed to your vision that you aren't pragmatic in a scenario where you can have another voice that you respect in the room help guide the direction for the company, especially when option A isn't working quite as nicely. And then also it's just, like people think about getting venture funding, and then all of a sudden their next thing is, when is my name going to show up in TechCrunch? When are we going to exit this to an IPO or SPAC? But that's rarely the case. It's going to be many years in the making, and there are different things that happen internally within the company and externally in your life where your focus and attention just won't be on the company full time. And so you do need that kind of number two or co-pilot to help guide the company.
Yeah, I think to your point, building a business from 0 to 1 may be a different skill set than managing and running a business at scale. And I think that, to Rich's point, having a co-founder from the 0 to 1 stage when you're building can be really important, because it can be a very lonely experience, and it's nice to have somebody. One, it's hard to find someone who's good at everything, right? So to have folks who are balancing your complementary skill sets. I will say though, I have seen that once a company hits scale, it may actually be difficult to manage with co-founders. And you really do need like a leader at the helm that is the true voice of the business. So, anything we say here will always have an outlier. So there's no hard and fast rules. There are incredible businesses that are solo founders. There are incredible businesses that have co-founders. But I think on the build stage, co-founders are really important. And then at the scale stage, you can be a solo leader running the ship.
No doubt, no doubt. To that point on scaling, some say that the dirty secret that startup founders don't necessarily know is that at some point they become glorified recruiters. Would you agree with that comment? How critical is a recruiting ability to a founder and to the success of a startup, and how do you guys support that function?
So I think that recruiting is incredibly important, but I think it discounts the skill set that founders really need to call them glorified recruiters, because you really need to set a vision, and you really need to understand product market fit, and you really need to understand what you're recruiting for. So I think we all know folks who are absolutely brilliant, but the question is brilliant at what? So if you recruit an all-star brand marketing CMO, but what your business really needs is a technical marketer, then it doesn't really matter how well you were at attracting them. You didn't really understand what your business needed. So I think that founders really need to understand the vision of their business and where they need to plug in for blind spots, as Rich said earlier. But yes, I do think that being able to attract talent is probably an underrated skill, because your business should outgrow you as an individual. So as much as we look for great founders, we want people that are able to not only sell their customers, but to sell other brilliant folks to join them on building that vision.
Matt, and I'll give Brian some airtime on this, because I know he's, every company that he's built, he's been a master at hiring and bringing on amazing teams. Recruiting obviously is very important as you scale your company. And I think those same skills actually translate to another area that's equally as important, which is being able to raise your next round from VCs, right? So as the founder or CEO of your company, it's as simple as having tremendous likability, right? Like likability and having clarity of thought about the reason why your company needs to exist. Once you have those, if your product is good, you're going to be able to attract investors that gives you who give you money, and that money plus your likability as well as the purpose of your company is going to help you on the recruiting end, right? But my point there is being able to woo investors is just as important as being able to hire the right team to help you build your company.
Yeah, I totally agree with everything Shane and Rich said, and it really is when at the start of a company, at least the way I've always started my companies, it's you want to surround yourself with people who are different than you, have different strengths than you, right? And especially the starting team, the earliest employees. I look for just smart athletes. That's what I look for. I look for 3 or 4 or 5 really smart athletes. And what I mean by that is people who are super smart. They can figure things out on their own. They don't need a lot of hand-holding, and they run, right? At some point, these smart athletes, we'll start picking up kind of like what are they really, really strong at, and you kind of start slotting them into certain roles, and you start bringing in from the outside experts into those roles as well, right? But that's only as you start to scale, and it's very rare, truthfully, that founding teams take a company from 0 to call it $10 billion, like a massive public company. It's rare. It's like, sure, you've got your Jeff Bezoses in the world and your Elon Musks and so forth, and more power to them, honestly, for being able to start something and scale it into something grandiose. But most can't, and most need help in terms of bringing on the right team, maybe even handing over the keys to another CEO to take it to another level. And we understand that journey, and we understand like some entrepreneurs have it in them and some don't. But what we look for is so early that what we look for is, can this person even get from A to B, right? That's what we seek out.
No doubt, no doubt. And we've discussed a lot of the positive markers that you look for in founders and entrepreneurs. How about some of the negatives? How about some of the red flags that might tell you, hey, we see an interesting idea here. This company may have some traction, but something that this is giving us pause.
I think the one thing that gives us a lot of pause is when we meet an entrepreneur who cares much more about the me versus the we, right? It's anyone who loves to take credit when things go well and points their finger when things go bad. Those are the entrepreneurs that we tend to truly shy away from. And it's time and time again where you see these entrepreneurs, they care deeply about their own reputation. They want to be featured in .LA or TechCrunch or whatever it is. They want the glory, right? And it's just anyone who's more focused on glory as opposed to building their business and their own team and caring for their team is something that's a big red marker for us.
I think this is probably more of a general comment about what we do. We talked about the qualities that we look for in founders and business ideas. But we can't invest in every great entrepreneur and every great idea that's out there, right? So as a founder looking for money, it really, one, you should have thick skin, right? Like it's not a judgment on who you, in 99.9% of the cases, it's not a judgment on who you are or the quality of the company that you're pitching. It really is the fact that, we have our own biases against certain industries, things that we may care about that you think is not as, is not something worthy of being mentioned in the deck. So the overarching thought here is, one, as you raise, it's going to be a volume game. Don't take it personally. We can't invest in every great entrepreneur. It really is a numbers game for us. And frankly, even though we feel that we have everything set up in a way where we optimize for success, we are investing in a highly risky category. And so you just never know. And as a result, if you get a no from many, from BAM or many of the other great funds in LA, that shouldn't deter you. But you should also always try to understand why someone didn't like something, because maybe it prepares you better for the next pitch, right? Like I've always liked it when we pass on a company and the founder reaches back saying, hey, thanks for the meeting. It was great knowing the BAM team. Do you mind if we keep you updated? Which we absolutely love, right? Because we want to be proven wrong, but we also want another bite at the apple. But we also like it when founders are open to critiques, whether they matter or not. It's just, if you're asking me for my opinion, I will happily give it to you. And then it also allows us to build a relationship where we can track your company and obviously get a chance to invest in it later.
Which I imagine is great input for a founder, whether you're talking about investors who have passed, partnerships that may have never come to fruition, or recruiting attempts that might have fallen flat. Probably a good lesson, as a full thread through all potential business relationships. And Shameen, did you have a further comment there?
No, I was just going to add that, some of BAM's biggest successes have been companies that had the most trouble raising in the early days. So just echoing Rich's point that getting passed on is just an opportunity to understand that no, and refine. And also, you want to preach to the choir and not convert an audience. And it really is a two-way street, and that your investor has to be a good fit for you and you have to be a good fit for them. But you want someone who's enthusiastic about leaning in. And, think about it as a dating example. I think I have dated somebody that is perfect on paper, like has all the resume qualities, and you're like, I should be more into them, but I'm just not. That's kind of how it is. Our opinion of a business is not reflective of how well that business will do. It's just really matchmaking sometimes.
Yeah, no shortage of the parallels between the startup world and the dating world, I'm sure. Since we're on funding, let's build on that for a moment. What's your general perspective on companies, over-raising, under-raising, what they should be shooting for, particularly in very frothy funding environments like we're in right now? And then also, as very early stage investors, what do you guys see as your role in later funding rounds?
Our role is to get the company to a situation where we can alley-oop them up to the next tier of investors who do Series A, Series B growth. So the minute they sign on as a BAM portfolio company, our job really is to be there and say, how do we support you, right? And we're pretty laid back, and people understand there's no BAM acceleration school or course that we put them through. We literally say, look, anytime you run into a roadblock, you have you have any one of us on the team to reach out to. We will get back to you with here's where we can help, here's where we can't help, here's what you should be thinking about, right? So, and the end goal there is, how do we get the next round of capital that allows you to grow, right? Like that's what keeps us up at nights, right? Like, how do we support a company? So the Lightspeeds of the world, the Sequoias come in and slot their next big check to really give the chance and an opportunity to exit for the types of exits that we're seeing these days.
Yeah, and I would say in terms of fundraising rounds, to the earlier point made about clarity of purpose, we spent a lot of time fine-tuning the narrative. I think people don't talk enough about, it's not just about being an incredible business, but how you're articulating that business to others. You know, investors see tons and tons of pitches a day. And so what we really try to help our founders with is, how can you articulate this in a clear way that you've captured mind share of that person? And in that first 30 seconds, they're like, I want to hear more. I want to dig more. And if we can give them that door, you know, get their foot in the door, and help them figure out, you know, how they can show that clarity of purpose, then that's really what we try to focus on in fundraising efforts.
Yeah, and getting back to the original question, that it's, you know, as an entrepreneur, it's pretty frothy right now. You know, there's a lot of capital out in the marketplace, and so it's you know, I honestly, it's like sometimes I have to like pinch myself, thinking like, did I really hear that right? Right, like some graduate from college has never built anything before, comes up with an idea, raises 20 on 50, right, as a seed round. It's like you hear these stories, you're like, wow, it's frothy. And so, but with that said, you know, Ben, we try to be very smart, truthfully, with our capital, and being smart stewards of our capital and our LPs. And so we tend not to overpay in terms of valuations. And you know, as an entrepreneur, you want just the exact opposite, right? You want people to overpay. And so as an entrepreneur, I would say times are good right now. Raise as much as you can, and raise more than what you think you need, because the money is there.
Yeah.
Right. And you know, look, times are going to change. We all know that. It's like things never go up and to the right forever. You know, there will be a correction at some point. I don't know what would cause that correction right now. I don't have, if I had that kind of clarity and vision, then I'd be a lot richer today than I am. But yeah, it's you know, times are good now, so take advantage of it. Go raise some capital and get enough to really sustain yourself.
Great. An audience question that gets a little bit more into the granular details of management here. In separating resilience from leadership styles and methods, you know, do you guys have any thoughts on, you know, kind of a holacracy management style, or a more traditional management style, and how entrepreneurs kind of, you know, proceed with build outs?
I'm more on the traditional side, truthfully. I really do believe that there should be a leader, and that there should be some structure in moving something forward. And look, it's been that way for centuries, and I'm not sure if it's ready for change. I'll give you a story. At LegalZoom, my co-founder and I, Brian Liu and I, basically, we really thought that we were building like a utopian company where everyone would have equal voice and equal say in every decision. I mean, that was our vision. It's like, we're like, okay, everyone's just gonna be equal. We're not gonna have any managers. We're not gonna have any directors. Everyone's just gonna be equal. That worked great until about 10 people. And then everything just fell apart. And then we had to bring in this guy, Frank Monestier. Frank, if you're out there, thank you, because he brought a lot of structure that we needed and helped build that business. So that's that. Everyone has the right vision. It's just, does it really work in the real world? It's a little hard.
Yeah. When it's small like that, right? Like you really, it tends to work I'm more of a traditionalist, and what happens is, as companies scale, you lose accountability, right? Like you absolutely need accountability, and then also there is more, you know, there's just more infighting, to be honest, right? Like, so there are three things: you lose accountability, there's more infounding amongst the founders, and then also everyone is so diluted as they raise subsequent capital, they start getting less and less ownership of the company. And at some point that goes back to losing more accountability. So I'm more of a traditionalist, and also the other kind of takeaway point is, as much as we invest in founding teams, be prepared for a day when two founders break up, right? Like we see that a lot more than you would think. So make sure that you have shares that are vesting, or at least have a mechanism where one person can leave the company in a way that doesn't really mess up the cap table too much or cause so much disruption that the company goes out of business because of it.
And so this is, I want to point back to a comment from Brian, but the question's to the panel. Brian, you were once quoted as mentioning that, a founder must have 100% certainty, but also be willing to pivot. How does an entrepreneur balance these two seemingly competing dynamics? And how have you seen that play out with any of your portfolio companies or your own companies?
Are you talking? Okay.
That was a Brian question.
Brian quote originally, but to questions to the panel.
Brian, it's a quote. It's your quote.
Yeah.
Yeah. So I like we said, we believe in resiliency, but not resiliency. We believe in resiliency of the founders and the founding team, not necessarily the idea, right? So that's why I'm saying it's like you definitely should believe in what you're building, but if it's not working, don't be stupid. Honestly, pivot. Go do something else. Go build something else. Come up with another idea, whatever it takes to survive. And I guess it's the resiliency and survival instinct that we're seeking. And so, yeah, it's believe in the idea, but if the market is telling you it's not working, guess what? It's not working, right? And that's nothing to be ashamed of. Failure is good. Honestly, the earlier you feel, the better, truthfully, because then you can pivot. Then hopefully you'll have enough capital to go do something else. And the perfect example is Goat. And many of you know this story. When I met the founders of Goat, that's Eddie and his buddies over there, they were doing something called Grub With Us, which was kind of like an online or a meetup for dinner parties where singles would get together and meet each other at dinners at restaurants. It didn't work. Right, it just didn't work. And they took the remaining money they had, which wasn't much, and they started Goat, and they pivoted. But again, they believe in themselves, right? They're resilient, and they just kept going, even if the original idea didn't work.
Great lessons, no doubt. I think we are coming to the end, so I did want to finish on a question having to do with what I like to call the psychology of the exit. And people read the TechCrunch releases and they look at exits and they seem very quantitative and it looks just like dollars and cents. But I think we all know that it's not. That the decision of when to exit involves so many psychological and emotional factors. Particularly is this the end? Is this a satisfying result? Is this satisfying to my employees? It might be satisfying to me, but not my investors, or treating be a significant enough result for a lot of people who I enticed with equity, and a lot of different components that go into that. So, how do you guys counsel founders through the decision whether to exit? As I'm sure any number of them have come to you with interesting messages or interesting offers that they're not sure whether or not to take.
This is a momentous decision for a founder as they think through their exit, right? So we don't really presume to have too much influence in that process, right? Like this is their livelihood, their family have put in money into it, their friends have, this is their identity for how many years that they've been building. So what we do is we share our experience across our own exits, as well as what other founders in our portfolio have gone through, maybe even talking to other founders who have done it more recently. But it's a very big one. What we can do is kind of give as many different viewpoints as possible, and then also explain the macro, right? Like at the end of the day, there are a lot of touchy-feely feelings regarding exiting, what you're going to do post-exit. Did I make enough money for myself, my employees? The macro is there are certain conditions where you should actually exit now because there's so much money on sidelines. Who knows that opportunity is going to be there 2 years from now, right? We also understand the trajectory, the buying climate of the sector that you're in. So these are all just data points, but ultimately it goes back to rule number one at BAM, right? We support founders. It's your decision. You want to sell, great. If you don't want to sell, we're right there with you. I mean, let's go.
No doubt. Another question from the audience. In terms of priority as investors, where are you guys prioritizing your time and let's call it your checklist in terms of looking at their qualities from recruiting to business development to marketing and HR?
Is the question where we're focusing our time in terms of helping specific companies, or what category?
Yeah, in terms of how hands-on you guys are, is there any one area where you might be a little more involved? Does that fluctuate based on the company and the situation?
Yeah, what we like to tell our founders is, Brian always likes to say, we're there for you when you need us, and we're not when you don't. And so we make ourselves available to our founders. We invest in people we believe in. We don't invest in a business where we feel like there's nothing we can help them with, but we really let our founders guide the dynamic. So we don't go in with a set thesis of BAM is going to help you with recruiting, but we know where our core skill sets are. And so one founder might need help with recruiting, another might need help with branding. And, whether or not we know the answers, we have enough of a network and enough operational experience to get you to the right people. So we're kind of your first call, and we will get you that answer, whether it's within our own knowledge or finding the person that can help you.
Awesome. Another question that I think, is particularly germane to LA companies in the LA startup environment, definitely given the track record here. Celebrity and influencer affiliated and backed companies. Lots of successes, lots of failures there. And it right off the bat would seem to be, particularly in the consumer space, you associate a brand with a notable celebrity with a large following, and instinctually to a lot of people that seems like a slam dunk, but it's not necessarily. Where have you seen, what are the factors that you've seen that determine success or failure, or really optimizing the benefits or not of having either a celebrity or influencer co-founder, or as a kind of very visible partner in a venture?
Sure. So I think a celebrity co-founder makes sense when it makes sense, right? Most companies don't need a celebrity co-founder, and most companies don't have one. Right? But every now and then, if the celebrity is very authentic to what you're building, authentic to the product or the service, then it could make sense. And the advantage that you get, with someone like that attached, a celebrity or an influencer or whatnot, is fast traction out the gate. That's the advantage, right? Whether it be trust factor, or whether it be they're constantly promoting it and they have a wide audience, it does help, right? But at the same time, what the true measure of whether or not a company will be successful is, again, it's the team, right? A celebrity or an influencer by themselves is not the team, right? This is not what's going to drive the business and build the business, and so it really is about operations, execution, the nuts and bolts, right? And you do get that advantage out the gate, but at some point, the product or service has to win on their own, because a celebrity or an influencer can get someone to try something once. If it doesn't work, consumers aren't dumb. They'll try something. If it doesn't work, they're not buying it again. Right. So again, there's a lot more involved than just saying, hey, this celebrity made it happen. Right. It's a lot deeper than that. So it has to be a real business.
I find if it's inauthentic to the celebrity or the influencer, then it doesn't really work, because the way it happens is a celebrity or influencer isn't the person that opens up their house and say, hey, I'm throwing a party, do you want to show up, right? Like, there's just too much reputational risk. They want a party to get going, then they show up and take it to the next level, right? So that's usually the lens by which I look at kind of celebrity attachments, especially if they're not like a Jessica Alba who shows up at Brian's store saying, you know, I want to change the world with this product, and hence the honest company. By the way, I just want to, since we're talking about LA eCom Week, I just want to do a shout out for Brian. He's been an entrepreneur for a very long time in Los Angeles. This year, he's had 2 companies that he's founded go public. So kudos, BAM's having a good year.
Yeah.
Congratulations there, guys. And you know, kind of leading to just an interesting question there for Brian. You know, going on about 20 some odd years in the LA startup community. You know, I think a lot of people of this generation kind of entered it, you know, early 2010s. Some of it was built out. LA was starting to make some waves and start, maybe not challenge San Francisco, but get on the map. What have you seen, you know, what palpable differences are there in the startup environment in 2021 from 1999 or even, you know, 2010, 11?
Yeah, that's a great question. And I mean, I could not be more proud of Los Angeles as a community in entrepreneurship. I'm long LA for sure. But the thing is, a lot of people will try to compare LA to New York's, you know, Silicon Alley or San Francisco, or it's like, we're not, we're very different. You know, we will never be San Francisco. We will never be Silicon Valley. We just won't. Right. And that's really because we don't have a great grandfather named Fairchild Semiconductor. Right? And we don't have grandparents named Yahoo and eBay. We just don't. Right. And so to build an ecosystem, you need 2 things. You need talent and you need money. Right. That's part of the biggest part of the ecosystem. And one drives the other. It's like a flywheel. Right. And so when we started LegalZoom back in the day, there was no money or talent in Los Angeles. Right. But which is why the earliest companies, the earliest tech companies in LA had to self-sustain themselves, which is why GoTo, the first paid search engine launched in LA, because there was no venture capital to be had, right? Or like Price Grabber and Zola, like all these were monetization engines. Even LegalZoom was profitable from day one because we sold you a last will and testament and we made money, right? So we had to feed ourselves. We didn't have the deep money backers that said, okay, Google, I know you don't have a business model, but wow, that's cool tech, right? We're just going to keep feeding you until you figure it out. We never had that until Snap, right? Snap came along and Evan came along and built something amazing for our city, right? The amount of talent that he brought down here, right? And the amount of capital that followed it really was, I think, a changing point for our city. And thank you to them, and thank you to, you know, the predecessors of Richard Rosenblatt's and the Scott Painters and all these other Bill Grosses and all the OGs of tech in LA who really attracted the talent, which attracted more capital, and the capital attracted more talent, and so forth. And we are where we are today because of all that.
Absolutely. There's you know, no shortage of kudos to go around. And most of all to Brian, Rich, and Shameen from BAM. Thank you so much. This has been an incredibly enjoyable and enlightening discussion. And I believe, G, we're going to take it away.
Thank you. Thank you, Matt.
Thanks, Matt.
Thank you, everybody.
Bye-bye.